My fellow Rezolvians, okay, I bought the stock. Yes, I bought the stock in after hours yesterday on the massive decline that we've seen. In today's episode, we're going to go over what happened, why Rezolve declined like it did, what happened on Friday. Rezolve was actually outperforming to start Friday. And then, of course, Donald Trump and tariffs on China and all of that ruined it. But Rezolve was actually about to break into the sixes before the drama started on Friday. So I bought the stock. I bought the stock in after hours. I will share with you now my new position in Rezolve and what I have at stake here. We do have news that came out Friday and after hours as well, which clearly, judging on the reaction we seen in the markets got it wrong. Okay? The news on Friday was neither bullish or bearish. Wall Street obviously panicked like it was bearish, but then you can see the sharp recovery. People were like, oh wait, this ain't bad news, and bought the stock. Pretty typical. Now, at the same time as this news came out, you had Donald Trump that confirmed that tariffs will be going on China starting November 1st. And that needs to be discussed as well. So do me a quick favor and hit that like button, as well as subscribe to the channel if you have not done so already. Check out that link down below in the description of this video. If you want to come trade with us, come invest in these, AI, energy, biopharma, gene editing, quantum opportunities, main themes over the next 10 plus years, check that link out down below in the description of this video. And if we do see another market crash, just like in April, we're going to make hundreds of thousands of dollars on it. So, not to toot my own horn or anything, but the trading community is the best place you can possibly be if shit does continue to hit the fan. You just got to keep your emotions in check, and you're going to make a fortune. Okay? So come join us, link down below. But with that said, let's get into today's episode. Okay, before we go ahead and get into my new position in Rezolve, how much I bought, all of that good stuff, let's start with some news that I actually did not plan on covering. It says here, Rezolve AI rating lower to sell at Wall Street Zen. It says here, Rezolve AI has been downgraded from a hold to a sell rating by Wall Street Zen, indicating a potential shift in investor sentiment towards the stock. Despite the downgrade, other analysts such as Roth Capital and Northland Securities have issued buy ratings with target prices of $12.50 and $7 per share, respectively, showing mixed outlooks within the market. Institutional investors currently own 27.96% of Rezolve AI stock, with Geode Capital Management significantly increasing its stake by over 1,100%. Now, this is not really like Wall Street Zen, I should say, is not really like an analyst firm. They're not really anything that investors care about. So, take it for what it is. It's really a non-event. But I did want to cover that first in case anyone's seen that and was like, oh my gosh, the stock downgraded. No, it's not really downgraded from an actual analyst. Now, this could be the news that came out in after hours on Friday that caused the stock to fall dramatically. Now, I think it was partially and mostly probably due to Trump and the tariffs on China. It seemed like there was a bit of a liquidity vacuum at some point, like not just Rezolve, but other AI stocks as well that have ran a lot in the last couple of months. Also, we're down like 10+% alone in after hours. Okay, I actually bought another company besides Rezolve. Also, again, if you guys want to see the new stock that I am buying, when I'm buying new stocks, check that link out down below in the description of today's episode. But this is the news that came out. It says Rezolve AI PLC announces shareholder transfer to a new global institutional investor. I think the algorithms may have interpreted this as Rezolve sold stock, like a private placement, to another institutional investor. Now, I'm actually delighted to see the stock react the way it did. Not only because I got an opportunity to buy the stock in the fours again, which I've been talking about. I'm not really interested in buying the stock besides in the fours. I might buy it in the fives. Like, it's tempting. But once it gets into the fours, it's like a win-win, no-brainer kind of, situation for me personally. But I'm really delighted the stock sold off this way because it screams at management, you better not dilute the stock, right? Because that is what the stock took the news as at first. And it's like a warning to the company, you better not dilute the stock or the stock's going to fall a lot, okay? Now, there's no reason for the company to dilute shareholders anytime soon. Their recent acquisitions were basically done for dirt cheap. The company is still sitting on over $200 million in cash. They are fine. I'm not expecting dilution anytime soon. But I think it's a positive when a stock reacts that way and shows management that they are not going to have it. Now, it says here, announced on October 10th, 2025, that DBLP C. Crow Limited, a shareholder linked to the estate of the late John Wagner and chairman/CEO Daniel M. Wagner, transferred 10.6 million ordinary shares to a new global long-hold, fundamentals-driven institutional investor. Okay. The transfer represented approximately 20% of the state's original holdings and was completed solely to settle administrative liabilities following John Wagner's passing. The estate, via DBLP C. Crow Limited, continues to retain a significant long-term stake. Management characterized the move as part of structured estate administration and welcomed the new institutional investor. So what happened here, in simple terms, is Dan Wagner's father passed away at some point, and there was expenses that needed to be paid. Lawyers, estate planners, blah, blah, blah. You get it. There could be 1,000,001 different people that needed to get paid upon his father's passing. Well, what it sounds like happened to me, whereas I'm not a lawyer, I'm not an expert in this field, but what it sounds like to me is an institutional investor was like, hey, I'll take the shares off your hands. Maybe they bought them at $4.50. Maybe they got a little bit of a deal, whatever, blah, blah, blah. But they're like, okay, we'll just take stock as payment. An institutional investor said, we'll just take the shares. They essentially transfer the shares. It would be like if you owned 100 shares of Rezolve and I own no Rezolve, but I wanted Rezolve. And I was like, hey, let me make you a deal. You can sell, maybe 100 shares is a bad idea, because the whole purpose of this is if you were to dump 10 million shares on the markets, the stock price is going to fall and your holdings are going to go down in value. The idea is you transfer, you still get paid, but you don't put that selling pressure on the markets. Again, imagine you had 1 million shares of Rezolve. You needed cash. And I wanted 1 million shares of Rezolve. Okay? And I came to you and I said, hey, look, you have this big holding in this company. You don't want to sell your 1 million shares on the markets and drive the price down and mess up your other holdings in Rezolve, right? The rest of your holdings in Rezolve. I'll take the 1 million shares off your hands for $4.50. It's a little bit of a deal, but I'll take it off your hands. Boom. I give you the money. You give me the shares. There's no selling pressure on the markets. Again, that's essentially what happened here. There was no dilution. There was no selling pressure on the markets. Rezolve had to disclose this because, it's a big shareholder, and there's certain filings, Schedule 13D/A is what it looks like here, okay, or a 6K. There's a couple filings that came out yesterday. So that's what happened, right? But Wall Street took it as initially there was dilution or selling pressure of 10 million shares. Now it says, quote, Rezolve AI chairman and CEO Daniel M. Wagner commented, quote, this transaction reflects a responsible and structured estate administration following my late father's passing. The family remains deeply committed to Rezolve AI's success, and we are pleased to welcome a new world-class institutional investor to our shareholder base. That's it. Somebody just took 10 million shares off of their hands. About 20% of Deep Crow, whatever. Okay. There was no selling pressure. It was a transfer of shares. That caused a 20% drop. Yeah. That is what you call an opportunity that you don't get all the time. Okay. So if you guys actually seize that opportunity, kudos to you. And you can see here, in case you guys were unfamiliar, the institutional ownership in Rezolve is really, really high. Again, Deep Crow owned about 12.31% of shares. Iger here owns 11.5%. Brooks Newmark owns almost 6%. Citadel Advisors, now a large position or large stakeholder in the company, owns about 5% of shares. Bradley Wickens owns 4%. Aston Wagner owns 3.31%. Coca Wagner owns 3.31%. BlackRock owns 1.5%. Dan Wagner owns 1.56% of shares. But again, like Deep Sea Crow is Dan Wagner's family, so he essentially owns a lot more of the stock than it actually says here. It's just held in this company right here. So that's one of the things that initially attracted me to Rezolve, was all of the insider ownership. Like, the executives in the company have skin in the game, so when they dilute shareholders or do something that you might question, they are also hurting their own position. Okay, which hopefully keeps a lid on some of the dilution and keeps driving shareholder value. Now, on Friday in option activity, you had one bullish option trade and one bearish options trade from hedge funds and institutions that were flagged in the interesting flow sentiment. You have a November 20th 750 put worth $184,000. And you have a February 19th, 2026 750 call worth $120,000. This was probably from the same firm, probably a bit of a straddle here, where they're going a little short in the near term to hedge the downside, but they are going long over the medium term, right, into February of 2026. Basically, some firm out there thinks there could be a storm ahead for markets, but by early 2026, it should be over with. Okay, so there was two trades. Now on Friday you had 1.5 million shares that were covered by hedge funds and institutions. Now short interest did rise in the stock from about 8% to 10.5%, which now equals 16.5 million shares that are sold short. About $95 million worth of a short position currently in the company. Utilization at 100%. Again, there's not a lot of shares that freely trade out there. Most of the stock is bought and held, so it's pretty hard to get your hands on shares to short in Rezolve, because most people just buy and hold their shares. Between insider ownership, hedge funds and institutions that are finally starting to buy positions in the company, and early retail investors, and 14% of shares owned by private companies. Yeah, the flow is pretty restricted, and that's why Rezolve has such volatile moves, because there's not a lot of, shares trading out there. The order book is not that deep, okay, because there's not that many shares trading. So if people just go out and start buying up all the available shares, the share price goes up a lot. If people start to sell or get panicky for even a moment, that's why you can see these big drops. We've actually seen two now 20% declines in after hours, one of which happened like a month ago for no reason at all. The other one just happened on Friday. for essentially no reason at all. Wall Street got this news wrong. The algorithms freaked out a little bit. And then once people actually read what happened, they went out and bought the stock, because Friday's drop was literally a non-event. Now, Trump and China and tariffs, that also had something to do with it. At the same time that news of the transfer came out, news that tariffs were going to go into effect on China on November 1st also came out. So, yeah, it was really bad timing, I guess. But it did present a pretty massive opportunity if you were able to see this. The decline only lasted about 5 minutes, and then over the next 5 minutes, it was right back. So if you were off your phone in this 10-minute time frame, you missed the opportunity. Okay? Now, what happens if Trump doesn't back down from China tariffs? What happens if they go into effect? What happens if they stay into effect for a while? How does that impact markets, and what is my plan going ahead? Well, just for time's sake in this video, we're not going to get into all of that, but we will talk about it more in the next video coming out at 8 p.m. Eastern Standard Time today, and what Tom Lee actually just said about this not mini, it was quite a large sell-off that we've seen on Friday. And how do I plan on going about this market? Well, first and foremost, you need to be prepared for anything to happen. But you need to acknowledge that Trump does not want a bear market in the stock market. Trump does not want a recession. It's totally counterproductive to his policies thus far. He wants a strong economy. He wants to compete in AI. He wants a strong country. He wants lower interest rates, blah, blah, blah. Having a stock market crash does not accomplish any of that. Having a recession does not accomplish any of that. Now, a lot of people are going to try to time the bottom. But the problem is, and the reason why I started to buy on Friday, is because you will not be able to time the bottom. Trump does shit on purpose, right? Where maybe even this Sunday, you could get news that Trump and the Chinese president are going to have a phone call. And just that alone is going to send stocks higher again. Okay? At any moment, Trump could come out, even when markets are closed, and de-escalate the situation. That's what he did in after hours on Friday as well. You've seen stocks really started to nosedive. About an hour and a half later, Trump says, oh, wait, I'm actually still going to have the meeting with the president of China, which he said 8 hours prior that there was no reason to have a meeting with China. People kind of took that as maybe Trump is looking for an off-ramp. Maybe, Trump doesn't want to actually put tariffs on China. Blah, blah, blah. So stocks started to recover. It's very uncertain is what I'm trying to say. As stocks go lower, you need to be a buyer on these red days. Unless you don't like money, unless you're so fearful and emotional that it gets the best of you. Now, there is a small chance that Trump is serious, that tariffs stay in effect for months on China, and we go into a recession. In that scenario, you need to be prepared for that as well. So it's a very tricky market. And let me know what you are doing in your positions down below in the comment section. Okay, now here's the deal. This is my position in Rezolve in this portfolio. $65,520 invested in the stock. Unrealized return up $25,167, or up 62.4%. My average cost basis is now $3.10 a share, invested for 113 days. Current quantity is now 13,000 shares, up from 12,000 shares. So I bought 1,000 shares of the stock. It's actually stupid, okay, because I tried to buy 2,000 shares at $4.09, and it snapped back way too fast. Way too fast. I should have just put in a market order. Public doesn't let you do that. You actually have to name your price, and it's just stupid. It's kind of frustrating, but whatever. I seen that opportunity and tried to seize on it a little bit larger. Did not get filled, okay? And I didn't even realize until a couple minutes later. Like I sent out the alert in the trading community, like, hey, I bought 2,000 shares of Rezolve, posted the screenshot. And then I realized, shit, it didn't actually fill. And then, I did buy 1,000 shares at $4.72. So I did buy another 1,000 shares. As I've said before, I am very interested in buying Rezolve in the $4 range. Okay. And if we go into that range, I am going to be a buyer, especially on panic and fear. So now there's 13,000 shares in this portfolio. Current market value is $70,548. Total return $29,048, up 70%. Average cost basis $2.96. 14,000 shares here. Okay. I still have these Rezolve 250 calls for February 20th. 15 of them. Total return 181%. Current market value $4,425. I don't plan on selling these either until the stock gets the respected valuation that it deserves. They just announced $500 million in ARR for 2026. We are about to head into 2026. It should trade based on that. Based on that, it should at least bare minimum be trading at 10 times sales. 10 times sales is a $5 billion market cap. Last I checked, the company has a market cap of about $1.65 billion on Friday's close. It is trading substantially below its fair market value. That's not even like an aggressive valuation. 10 times sales. Like, there are some quantum companies that are trading at, hundreds of times sales. There are some other AI companies trading at 100 times sales. 10 times sales is nothing. It is lower than basically any other AI company you can point out besides the hyperscalers, if you even want to call them AI companies. Like, this is a very modest, conservative valuation at 10 times sales. I hope we understand that at this point. Okay, but divide this by 1.68 billion. And you're looking at a stock that should be 3 times higher than where it is today. You're looking at a stock that should at least be $15.27 per share. At least, okay? Not including if we get to like 15 times price to sales or 20 times price to sales, which is still not crazy. That would be a, $10 billion market cap company divided by, 1.68 billion today. That's a 5.95x from here. Okay? That could put the stock at about $30 per share. That should happen anytime now. You should see an explosion of the valuation. Yeah. I think we're still seeing the dust settle from the short reports. I think people are still nervous. I think you want to see more analyst coverage on the company. Some big analyst coverage would be nice, like a JP Morgan or Morgan Stanley or, even Wells Fargo or, some of your big dogs, Citi or Bank of America. You have coverage from Cantor Fitzgerald. You have coverage from some other smaller firms. But let's get the big dogs in here, okay? We know Citadel loves the company. Citadel bought a stake, spent $100 million in their stake in Rezolve at $6.67 per share. If the stock gets into the fours, I'm a buyer. Heavy buyer. Okay? Especially the low fours. Take my money. $3? Take it all. Okay? There's no better risk reward than Rezolve and AI stocks right now, in my view. People are excited buying these companies at 50 times sales, 100 times sales. Yet you have Rezolve trading at 3 times next year's sales. I will take that for a hyper growth company any day of the week and twice on Saturday. Okay, so yeah, that's kind of where we are here. Now let's add up the whole position that we have. Okay, So we got 13,000 shares in one portfolio, plus 14,000 shares in this portfolio, plus 1,500 shares equivalent in options, 28,500 shares, plus 1,000 shares in Webull, and 1,300 shares in Thinkorswim. I don't even look at those positions like at all. They just sit there, and I can show you guys those positions if you guys really want to see those, or you can just take my word for it. We have 30,800 shares total times the current stock price of $5.04. That is $155 invested in the company still, and in the fours, in the threes, I'm going to put tens of thousands of dollars into the stock at those levels. This is really a play for what does the end of 2026 look like? How are we looking then? You know, I think AI is going to do very well as an investment over the next 12 months. I think whatever fear that Trump injects into markets is probably going to be short-lived. It's not in his best interest to cause a bear market or some massive crash. And I think people have really been underestimating Rezolve, and the short report really crushed some of that. And the company is executing very well. So yeah, let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.